Microsoft. Overvalued, undervalued, time to buy, time to sell short. These are all very good questions. Hi, I'm Mike Nugent, finance and investment professor at SUNY, New York for the past 14 years. And I'm here to give some general advice and overview of Microsoft Corporation. I don't personally own Microsoft or have a stake in Microsoft, and I'm here just to educate, not really provide specific directions on whether or not you should buy or sell the stock, but just to provide you insights on the current trading status of the stock. So if I look at, and this is best viewed on full screen because on the smaller screen you won't be able to really see the numbers too well. And if you look at Microsoft, there's a 311 billion valuation on Microsoft. This is a huge company. Now, their PE currently is about 14. This is rather low compared to the S&P 500 average PE and very low compared to most technology stocks. One reason for the low PE is that Microsoft faces a lot of competition in all its markets. And recently, Microsoft has announced that it's lowering the price of Windows, cost to manufacturers who incorporate Windows into netbooks and tablet level devices. So this could put significant pressure on the two biggest areas of profits for Microsoft, Windows and Office. Okay, so let's look at some of the key statistics for Microsoft to get an idea of where this company is at. Now, the PEG ratio for Microsoft is 1.87. Now, the PEG ratio is something that anything under 1 is considered undervalued and a good purchase. And PEG ratio looks at the PE multiple and the growth of earnings. And you can see here that the earnings for Microsoft, the revenue growth year over year is 14%, which is pretty decent, but the earnings growth is only 2.8%. This is one of the reasons for the very high PEG ratio, and the PEG ratio would suggest not to buy the stock that's overvalued. That's just one indicator. If you look at some other key indicators, Microsoft has a beta of 6.9, so a little less volatile than the market. In the past year, it went up 37%, which isn't saying too much because in the past year, stocks have gone up about 30 or 35%, depending on what index you look at or average. So they're running about in line with the market growth. There is 1% of shares sold short, so very few people are willing to short the stock, meaning most people don't consider it overvalued. Most of the smart money doesn't consider it overvalued. And I mean, they have 7.5 billion shares in the float and only 69 million short, which is a very small amount. 69% are held by institutions. Also, not the highest percentage for a large tech stock, which could say that a lot of institutions aren't too interested at the current time. Now, Microsoft has a huge cash hoard of $28 billion, and it pays a significant dividend. The dividend yield is dividend payouts about 36% of profits, or about the average 5-year dividend yield is 2.4, and the forward dividend yield is 2.9%, better than treasuries. So looking pretty good on the fundamentals. Revenue growth is 14%, which is very good for Microsoft, and one of the reasons it was able to go up for 37% in the past year. But most analysts, including myself, feel that Microsoft's revenues will be under pressure as its Office and Windows juggernauts decline in somewhat value. And Windows is the most under attack with the Chromebooks, tablets, and people shying away from laptops and PCs and gravitating more towards phones and tablets for their computing needs. Now, the total cash, what I mentioned before about cash is I should have been more specific. If we're looking at operating cash flow is 29 billion, which is spectacular. Their total cash in a bank is 83 billion, which is also very good. So they're very stable, very established, relatively safe company. I want to look at their chart to get a little technical analysis on Microsoft here, and let's do it over a year period is fine. We'll get the 100 and the 200-day moving average up, and we see here that Microsoft around This is significant here when the 100 crosses over the 200-day moving average in May. That was a very significant sign to buy Microsoft. And Microsoft has tested its support levels a number of times. Most recently, it tested the 100-day support twice and bounced off of it, which is a good sign that if the Microsoft stock goes down, investors are willing to jump in at the support level to support it. So I would not be worried about owning Microsoft right now. There's a pretty good lineup of stock price, 100-day, 200-day, which technically says the stock is still strong. Let's give a look at the RSI. And we see that the RSI is about 65 or so on a scale from 1 to 80. 20 means buy the stock, 80 means sell the stock. So it's reaching sort of a top, but not quite there. I think if Microsoft touches 40 and breaks above 40, then the RSI would probably touch 80, and that might be a point to jump out of Microsoft. So I think there's a limited potential on the upside right now in Microsoft. Maybe it could push itself up to 40, but it's certainly possible that it could retreat back to 30, depending really on how the overall market does in general. Okay, so let's just go back to the summary. Okay, so that's my quick overview on Microsoft. Not a bad stock to have owned for the past year, considering its dividend and its 37% increase in price. However, it may look like the Apple is fully valued at this point. Maybe has a $2.50 on the upside, depending on how strong the market is coming up in the next couple of months. So it's not I wouldn't say it's a terrible stock to own, but it's not particularly a very volatile or exciting stock. It's really a very slow mover over the past number of years. In fact, if you look at the chart, if we put up a 5-year chart on Microsoft, you see that it's been trading since the Great Recession. It's been trading in this $30 to $20, I guess $25 to $30 range since 2010, and it's recently recently broke out in 2013 to a higher level. So a very interesting stock, a very large company, something to think about to do further research on to figure out whether or not the stock is right for you to own. Thanks for listening, and remember to like and subscribe these videos. I'll try and post a new stock overview each day, so please subscribe and stay tuned for more videos. Thank you.